Hello, everyone. My name is Matthew Frailey, founder of BreakpointTrades.com. You know the drill. I founded it back in 2003, over 20 years ago, to provide advanced technical analysis, market commentary, and advanced trading algorithms such as our 21 SPY and ES mean reversion systems with about 90% winning trades. And of course, our most recent addition over the last year, our KISS systems, which have been just phenomenal. I did a video earlier today that I posted on YouTube, emailed out to our list and our free subscribers. So make sure to check that out. Really cool stuff. But let's get back to this video at hand. Again, I hope everyone had a nice weekend. It's Sunday, February 25th. It's in the afternoon. This is the extensive weekend newsletter for February 25th, 2024. And again, this newsletter is not meant just for today. It's meant for, today through the coming week. If you're new to Breakpoint Trades, to the website or YouTube channel, these weekend newsletters tend to be quite comprehensive, right? They're not set to be 10-minute videos for people with short attention spans. They're not Mr. Beast videos. They're made to really go in depth, do technical analysis, education, really get into the weeds. So these weekend newsletters are longer than our normal ones. Our normal ones end up being about 20 to 30 minutes. These weekend ones can take up to an hour. So just preparing you. Anyway, this is the table of contents for this newsletter. You can see it's divided into 7 major sections. Again, we do a top-down approach on the market where we discuss the major indexes, again, from the bigger picture all the way down to the smaller time frames. We'll look at some of our custom indicators and, of course, the bond market and the 10-year treasury yield. We'll look at most of the market sectors this weekend. And we'll also look at a couple world markets, the Japan Nikkei and China, which I've been covering. We'll also look at the US dollar, commodities, crypto, precious metals, GDX. And by the way, I added a few mining stocks. As you know, that area has been really not a good area for months. But I do think right in here, there's a shot that this area could be bottoming. We'll see. I added some stocks to watch just in case. As far as the trade ideas, we'll be covering recent setups. I also added new ones, but also given that the market, is at new all-time highs, it's in the 5th wave move, it is time once again to look at some of these hedges. SPXU, SQQQ, those are the inverse ETFs for the S&P and NASDAQ. So if you have a lot of longs and you want to start protecting those, these are some things to start to consider, these hedges. These are the ones I added for this weekend. And again, as far as the market, again, as you know, the market was pulling back coming into last week. And then it rebounded, bottomed midweek on Wednesday. And for the week, the Dow Jones, S&P, and Qs made new all-time highs, except for the Russell 2000 small caps, which are still in this large coil-like pattern. On Wednesday, the S&P 500 tested its typo here. This should be 20-day moving average where it found support and staged a rally to new highs. For the week, the Dow Jones gained about 1.3%, S&P added 1.7%, NASDAQ gained 1.4%, while the Russell actually lost ground. It was down 0.9%. Remember, it's on a coil pattern. Again, the big driver last week was Nvidia. Nvidia, these days it's kind of like the Greek Titan Atlas, whose job it is to hold up the heavens. Well, Nvidia's job is to hold up the entire market. Again, it's all been AI driven since early last year. This market, it's just been a crazy move, and market's been dominated by essentially 7 stocks. They call those the Magnificent 7, the Mega 10, and even the Fantastic 4 is another one. So a lot of funny acronyms there. But the last week we were favoring another move higher in Nvidia. We looked at that pullback as a wave 4, and that played out. So right now Nvidia is in this wave 5. Again, I'll go over that below. And as far as the S&P 500 and Qs, we were favoring the pullback last week to be bought. We were favoring that as a wave 4, and that ended up being the case. The market rallied up to new highs in a wave 5. That said, we're now in this wave 5, so it is time to start re-looking at some of these inverse ETFs again as hedges. Not saying it's time to go full bore short or anything, but it's time to start monitoring these or considering them. Okay. As far as the market, again, we still favor even if we get a little pullback here, we're still favoring it to be bought one more time, okay? Otherwise, short term, an important area on the ES futures is 50.90. If that is broken, we could see a quick move down to the 50.60 area. There's also a ton of economic news this week. You know, home sales, GDP, PCE, Chicago PMI, ISM, GDP, you name it. Lots of stuff. Again, I do think also the precious metals area is starting to look kind of interesting, so I added some stocks there. And again, it's just kind of funny. We talk about these mega, mega seven or magnificent seven stocks: Apple, Amazon, Meta, Microsoft, Nvidia, and they all have market capitalizations larger than all those listed companies in every G20 country. Isn't that crazy? Right? Here's another stat by Deutsche Bank. The so-called Magnificent Seven now wields greater financial might than almost every major country in the world. Staggering 13 trillion in market cap. So unbelievable. Here's another stat. The Magnificent Seven were up 1,700% since 2015 versus the S&P 500 being up a paltry 140%. So just something to think about, guys. A lot of passive investing in this market. It reminds me, again, those of you who may have been around long enough, there's a lot of you that haven't, right? I'm getting older now. I'm in my 50s. Reminds me of 1999, where you had Cisco, kind of like Nvidia now. Eventually, the party will end and we'll have a pretty good market correction. But for now, the trend remains up, and you got it. Timing's important. Okay, you got to follow the trend. All right, enough soapbox there. Let's go ahead and get on to the charts. So this first image here, this thought this was an interesting image here. Looks like it's being cut off a little bit here, but anyway, this shows a interesting development where the NASDAQ composite. Okay, here we go. Here's the image. It's not being cut off now. So basically, this was an image from Sentiment Trader last week. Very interesting image. So last week, you had the NASDAQ at one point up 3% with fewer than 55% of issues advancing. And the last time that occurred was in 1999 and 2001, okay, before that top. So it's the first time we've seen something like this. And here's some statistics. It's a little fuzzy here, but if you look here, this shows the results in the future from those events. You can see 1999, 2000, February 2000, April, May, June, 2001, March. So look at 1 year later. 35% down, 50% down, 41% down. So the point is, the party usually doesn't end whenever you see something like this, but it's down the road where you could be seeing a pretty sizable correction. And that also plays out perfectly with what we're seeing in the markets and the wave counts. Again, I don't think this current bull market ends here. I think it lasts until at least sometime in the fall, etc. Next. Image number 3, here's Nvidia. Again, I love this image from last week. Nvidia, this is Atlas holding up the world or the heavens, but Nvidia instead holding up the entire markets. So this is that wave count we were showing, this nested 1, 2, 1, 2. Now, if you don't know what a nested 1, 2, 1, 2 is, it's basically fractal. You have your larger wave count here, then your smaller degree wave 5 in here. So we were counting that as a wave 5 of 3. We were counting on that pullback mid last week as a wave 4, and that ended up being bought, as you know, with the earnings. You could see what happened with earnings the next day, the big gap, and we made some new highs. So right now, this is a 5th wave high. Okay, so this is kind of one of the final moves of Nvidia. That said, this wave 5 could extend. You also need to see 5 waves in wave 5. When I look at an intraday time frame, I don't see that yet. That's why I still think this is still going to chop around higher, but just realize it's in this 5th wave move now. Next, image number 4. Here's Nvidia from the KISS system tables. Remember, on the KISS system, it went long on December 28th, right? right here where you see the vertical line. Again, this is taken right from the website, guys, in the KISS tables. It's raised its stop 11 times, smart trailing stop. You can see the stop projection here, and it's currently up 58.25%. And interestingly, on that pullback we had coming into last week into earnings, the stop STS was not hit. It got close, but it didn't hit that stop. So, which is great. So if anyone was following that system trade and they decided to hold into earnings, you were rewarded. Now the stop moved up slightly. I'd like to see it move up more substantially here this week, but the system held. It didn't get stopped out. Good job. And guys, on that video I did earlier today, one thing we added were weekly versions of the KISS system. So on the KISS system tables that we've had out for about a year, they're all daily charts. Okay. Well, we added weekly versions. So here's the weekly KISS on Nvidia. And this is the thing of beauty. So on the weekly KISS, it went long on October 28th, 2022. Think about that, a year and a half ago. So it's been long a year and a half. Right back here, you can see it went long. Look at the stop projection or on the STS. So far, it's raised its stop 27 times. Current stop is 613. Okay, the trade is up 389%, almost 390%. Pretty impressive. So the KISS weekly systems could be useful for those who don't want to trade much. They could hold trades for a year or more at times. Whereas the daily systems may hold their, may get in and out 5 or 10 times a year. The weeklies hold a year or longer at times. Again, they're going to give up maybe a little more room because the stops are going to be wider because they're weekly, right? But they're not as active. So folks who aren't really active traders, that could be a good fit. Or, and they'll also still provide protection against bear markets and strong corrections because of the KISS or the stop technology. So it's something to consider, but great example on the weekly here. Next, image number 6. Here's another slide. This is taken from Bloomberg, Deutsche Bank. So again, shows the Magnificent Seven. They're up 1,700% since 2015, whereas the S&P is only up 140%. NASDAQ is up 230%. And so it just shows you the concentration with these Magnificent Seven stocks. They're really like small countries now. Think about it. They're not stocks anymore. They're their own governments. They're their own countries. Apple could be a country somewhere. Nvidia could be a country. It's just crazy. Next, image number 7. Here's, again, the KISS tables. Remember, we added the weekly, okay? There's also an extensive FAQ. It's 15 pages. I suggest you read it. So it should answer all or most of your questions. I tried to fill it out with everything. In fact, there's going to be a couple more things I'm going to add to it. And again, if you haven't done so, make sure to check that box to receive email alerts for your favorites. Okay, make sure to do that. Some other KISS trades. Here's CrowdStrike. This was a beauty. It went long back in September. It closed out finally last week. One hell of a trade. You can see the connecting line there, connecting the entry to the exit. So it's in cash now. And chart number 9, here's UPRO. That's the triple long ETF for the S&P. It's still long. Smart trailing stops 58.80. It went long back here on November 3rd. You can see the stop progression. Awesome. It's up 52%. And the final example here, then we'll get back to the regular market analysis. Here's Microsoft. They went long back here on October 25th. Current stop is around 392. Trades up 20%. Awesome stuff. All right, guys, let's go and move back to the general market. So image number 11, here's the here's the index sector tables, what transpired last Friday and for the week. So you can see on Friday, major indexes were bifurcated, sort of with the NASDAQ down and the Dow, S&P, and Russell up. For the week, all the indexes were up, as I stated, except for the Russell. As far as the 21 market sectors we follow here, all of them were up except for metals and mining. So it was a pretty broad-based rally for the week, which is good. Currency-wise, US dollar down 0.2%. Cryptocurrencies, as you know, were a little weaker. They've had a heck of a run. And the crypto stocks also had a consolidation. As far as commodities, mostly down here. The index DBC down 1.3%. Crude oil down 2.5%. Natural gas, remember, finally had that bounce back from that very oversold condition, up 5.6%. And again, it was up over 12% for the week, but on Friday it fell 7.25%. I do think this area is still an area to watch for an area to go long again. If you caught that bounce trade last week, copper was up, agriculture was up. Precious metals, gold was up 1.2%. The stocks, though, were down for the week. GDX, the miners, down 0.75%. Obviously, we want to see that get better. But I do think that area looks interesting, so I added some individual stocks. And as far as the bond market, the 10-year, 30-year were down. Next, image number 12 shows the economic news calendar. As I stated, we got a lot of economic news here, guys. New home sales on Monday. Now, various housing index, mortgage, ADP, initial jobless claims, PCE, GDP, Chicago PMI, ISM, construction spending, you name it, pending home sales. So a lot of economic news here this week, potentially move the markets. And let's go and jump to these index charts. So the first chart below, item number 13, is a weekly snapshot of the 5 key major indexes. So again, up and away. You can see the heck of a moves from the pullback we had last fall into October. After breaking out of those flag channel patterns, it just continues up and away, Superman. Pullbacks have held the 9-week EMA. The one exception is the Russell IWM. It had a nice move from the October lows, but right now it's kind of going sideways. Next. Chart number 14, here's the big picture view. Again, markets, as you know, had the 2008 bear market, and then we bottomed, and that was pretty much a generational low. And we had a pretty good correction in the 2022, which ended up being a good buying opportunity. Of course, we're at new all-time highs again, up over these weekly or monthly Bollinger Bands at this point. So getting a bit extended here short term. And finally, chart number 15, here's the daily chart of those 5 major indexes. So again, up at the upper Bollinger Bands here, so getting a little nosebleed. A couple dojis here to be aware of. We are quite extended, guys. We pulled back late Friday. We'll see if that pullback from late Friday, works its way into Monday. Next, let's look at the indexes individually. Here's the Dow Jones. So the Dow, again, up and away. The last pullback, held this uptrend support, didn't tag its 50-day moving average. All the moving averages are sloping up. Whenever that happens, you got to be extremely cautious about trying to short, guys. If you do short, make sure to take profits aggressively, because the markets aren't ready to really roll over until you get these moving averages starting to flatten out. Okay, they're just pointing straight up here. Again, that doesn't mean you go throw a caution into the wind. Again, we still have this big divergence we're monitoring. Divergence isn't a sell signal. Some things to watch. One thing to watch is this RSI trend line. If that were to break, that would be a good confirmation. Next, chart number 17. Here's a weekly chart of some of these KISS systems on the indexes. So the S&P, Qs, IWM, and the Dow. So only the Dow had a new smart trailing stop. It jumped up from 363 to 369.20. The other ones are still in place, still the same place as they were last week. Next, chart number 18. Here's the daily view of the S&P KISS system. On Friday, the smart trailing stop jumped way up from 48.18 to 49.51. So that's a great jump, good 130-point jump. Awesome. So now profits are really protected. Again, that's a great example of the KISS systems that went long back here just after the October lows. Set the initial stop at the swing low, moved it up methodically over time. And, again, it doesn't matter what happens now. This trade is profitable. It stops out at this most recent stop. It's wildly profitable from that entry. Next, Chart 19, here's the weekly view of the S&P. Again, up and away. Had a nice rally since we took out the 2021, 2022 highs. And no changes yet or anything, obviously. Trend remains up. Next, chart 20, here's the daily view of the S&P. So we've been showing this steep kind of wedge-like pattern, and we rallied off of it last Wednesday. S&P found support at the 20-day moving average here. So we're now up again near the upper portion of this wedge. That is an area of resistance where you got to be cautious about taking a bunch of longs. This is resistance, guys, in an area where we could see a pullback. Notice the RSI divergence here. You have a 3 pattern push here. 1, 2, 3. What I mean by that is you have three highs here, and that's a 3 pattern push. You also have a divergence on this MACD, so that's something to watch. We also have a black candle, so be aware of that. The largest pullback in the uptrend, guys, which is pivotal, has been 130 points. That's your symmetry target. That means in order to break this uptrend cycle, we need a pullback larger than 130 points. Okay. Again, that would likely result in a break of this wedge to accomplish such a thing. Next, chart 21, here's the 4 time frames we follow with our custom indicators. So the daily, again, as you know, price rebounded right off that ATR. That ATR is always a great guide. These show you those A's. Whenever you see the A's, cautions in order. You see the pullbacks from those. ATR support on the half day. Notice on the 130 minute, we got a resistance cycle dot. Price rallied off of it, the support cycles last week, and we got a resistance cycle in the 78 minute and a DeMark 9. Remember, price rallied off the support cycles last week, so this is a cautionary note here. These cycles are pretty good. Next, chart 22, here's the half day chart. Again, we're just up in this channel, but we are at the upper portion of the channel, so that's not an area where you want to be going aggressive long. That's where you want it to be taking some profits. You know, where you want to be taking longs is around the lower portion of this channel, unless you break it. Chart 23, here's 60-minute view. Again, we're up in this channel. Essentially, again, last week, that whole pullback was essentially a 3-wave ABC. Price needed to hold that 49.20 area, which it did, and we rallied to a new high. Chart 24, here's a 15-minute chart. We also had a little wedge coming into Thursday. Thursday was a massive day on the market. S&P was up like 100 points, which is insane. Next, moving on to the triple Qs. Here's the NASDAQ. Remember, I've been showing this nested 1-2, 1-2. It's kind of like that Nvidia pattern, remember? So we're still working on this wave 5 of 3. When this ends, I'm looking for a deeper wave 4 correction, okay? But, you know, this hasn't ended yet. Looking for that deeper wave 4 correction, but then we're looking for yet another rally to new high after that. But then that may complete this whole bull market finally. Chart 26, here's a daily view of the Qs. Again, you can see this clean uptrend channel that we're in. Largest pullback has been about 17.5 points. Look at these symmetrical pullbacks. So Qs need to pull back larger than 17.6 points to break the uptrend symmetry. Chart 27, here's another daily chart, just a zoomed in view of that channel. And chart 28, here's a zoomed out daily view. See the channel. You can see a longer uptrend line going back to the beginning of 2023. That comes in down around the 200-day moving average. That's a long way away. But, you know, could that be tested on that major wave 4 correction once we do in this current trend? Definitely. Next. Looking at smaller time frames, chart 29, here's a half-day chart showing the same thing essentially. Chart 30, here's a 60-minute chart. Again, last week into Wednesday, we essentially had a perfect ABC. Notice this perfect symmetry. I mean, it called that bottom just perfectly. Then we rallied to a new high. Here's some open gaps, so that could be filled on the next major correction. Those open gaps are eventually filled. And chart 31, here's a 15-minute chart. You can see we had a wedge coming into Thursday, and then boom, huge rally on Thursday. Just a crazy move. Chart 32, here's the KISS system for the Qs, the daily. The stop is 421.20, so it's nicely moved up last week, kind of right near that ATR. Awesome entry, of course, back in late October. And Charter 33, here's the 4 time frame. Similar look to the S&P, like I said. We bounced off that ATR last week. We have some resistance cycles on 130-minute and 78-minute with the DeMark 9 there, so some caution in order. Charter 34, here's the small caps, IWM. They were down for the week. Otherwise, again, they're still trading this big coil-like pattern. And Charter 35, here's IWM on a 30-minute, just kind of monitoring this little channel. Still looks kind of weak here. There's an open gap here that it looks like it got pretty close to filling, didn't quite. And guys, as I stated, with the market at new all-time highs, with the market in some sort of fifth wave high, we got to start looking at these hedges again. Remember, I put out these hedges a couple weeks ago, and they gave you a nice trade, but you needed to take profits. Well, you know, there's something to watch here. Again, they're still downtrending, but something to watch, especially if you got a lot of longs. These aren't also about shorting. Maybe you have a bunch of longs that you don't want to sell, but you want to protect if there's a pullback. So these are something to consider. And Charter 37, here's the SPXU triple inverse ETF for the S&P. You can see the same channel. So it's time to start watching some of these hedges. Let's move on. Next section of the newsletter, let's look at a few indicators. Here's the VIX. So the VIX Bollinger Band system. This has been a great little system. Whenever it closes outside its Bollinger Bands and then closes back inside, that's a buy signal. You had 5 buy signals in a row here. All these have played out. Look at this. You even had one last Wednesday, and look how well that played out. It's been pretty awesome. Next. Charter 39, here's the NYAD, advanced decline issues. So just showing this because I'm not really seeing any divergence here. It still looks fairly healthy in my opinion. Charter 40, here's the NYAD with the 10-day average versus with the S&P. Now here you do have some divergence here. Notice the divergence on here. You can see in the past you had some divergences that led to pullbacks. So at the moment you do have some negative divergence here to monitor. And finally, Charter 41, here's the NYSI 9 EMA crossover system. As I've been showing, this has a divergence, okay? Because this is not taking out those highs. But guys, this cross back here, remember the original buy signal was back here in November. But when it crossed below the 9 EMA, this sell signal was never confirmed. So technically you would still be long from that original buy signal back here, okay? However, the next, you can see it went over its signal line, the 9 EMA. The next time this crosses back below it will probably be a good sell signal in my opinion. All right, let's look at the market sectors. We're going to cover a good handful here just to show you what things look like behind the scenes. So here's the transports, IYT. Briefly made a new high last week, doji candlestick. Again, this cup and handle I showed about a month ago has obviously been playing out nicely. Charter 43, here's XLK. Again, this is technology strongly made up by Microsoft and Apple, make up the vast majority of this. But you know, so far it hasn't taken out its highs. I marked what could be a little head and shoulder if it doesn't make a new high here, just something to watch. Charter 44, here's the semiconductors. Again, they made a new high. It continues to diverge on the MACD and RSI. It is quite extended. Charter 45, here's XLI Industrials. Again, up and away. This has been super strong. And let's take a look at a bigger picture. Here's the weekly chart of the industrials. Look at this, just the epitome of strength, up and away. You can see found it supported as 200-week moving average back in 2023. Look at that look at the Bollinger or the moving average ribbon pinch back here in October. That was an excellent buy. Charter 47, XOP consumer staples, slightly breaking out of this little ascending triangle pattern. Charter 48, XLB materials, making a new high here. So some of these sectors have really come back and participated, which is what you want to see instead of just tech leading. So here's retail, also making a new high. Remember, I liked it back through this little ascending triangle pattern. One sector that's been weaker though is utilities. Otherwise, they're in this little downtrend channel that we've been showing. Remember, they're strongly influenced by bonds and interest rates. Chart 51, healthcare. Boy, this has been the Superman. Found support of this demand zone back here in October, and it's just been up, and away. Bull flag back here in January. Man, just straight up. Chart 52, real estate. So broke out of this little channel, but so far it's just been meandering up a little bit. Obviously, the real estate market's got issues. And chart 53, here's home builders. They're at a new high. There is diverging here, but they're at a new high. What's the weekly look like? Well, here's the weekly chart now. I didn't update this, but back here in the fall, I was showing a potential cup and handle pattern, and this is basically playing out. You can see the cup and handle right here playing out. Chart 55, banks, they're still in this little pattern, sideways pattern they've been in for the last nearly 2 months. Chart 56, materials. This is the weekly chart. I think I showed the materials above. This has a large potential ascending triangle pattern on the weekly. Kind of a really nice looking chart, something to watch. Maybe that's saying commodities are eventually going to have a nice move up. And taking a look at the energy sector, here's XLE Energy. Broke out of that little channel last week, but it hasn't broken symmetry yet. So far, the largest rally has been about $8.20. This move hasn't broken symmetry yet, but it's getting close to it. Chart 58, here's oil services. Slight poke out of the channel, but again, to break symmetry, needs to move up over about 36 points off those lows. Hasn't done that yet. And some individual names we've been shown in the energy sector. Oxy, which is, broke this trend line. This is Warren Buffett's favorite. He's held that for a long time. Chart 60, ExxonMobil, the bellwether. We had it as a long idea back here in January off these dojis, hammer candlesticks. We could have had a tight stop there at 94.89. And again, you have a nice higher lows here. You can move the stops up and just stay in the trade. Chart 61, I've been showing this. This is the weekly chart of the S&P oil and gas exploration. You have a absolute textbook beauty of a symmetrical triangle here, kind of a large inverse head and shoulder pattern. Again, this is a weekly chart, guys. I mean, this could chop around in here, much of the year, but it is something to watch longer term. All right, chart 62, here's the bullish percent energy index. Remember, this went on a little buy signal about 2 weeks ago when it crossed over that 20 MA there. Chart 63, here's the Japanese Nikkei. This is the monthly chart. Again, new all-time highs. Remember, the Nikkei popped out back in 1989. Remember, a lot of those movies in the 1980s, they were about Japan, and they were showing how Japan's going to take over everything. And, they were, even the Die Hard movie with Bruce Willis, that large building, remember, was bought by a Japanese conglomerate. So, but their market topped, and it was in a secular bear market all the way to 2009. Finally broke out of that big channel, and it's made new all-time highs. Chart 64, another area that's been in the toilet is Japan. Here's the FXI. I've been stating this for the last few weeks. I said, while our markets are at new highs, nosebleed territory, this one's at multi-year lows, could be lower risk. It's been moving up nicely. Chart 65, here's FXI, the daily. Remember, I talked a couple weeks ago, I talked about these patterns looked bullish, volume patterns. You had a series of higher lows here. You could have just had your stop at. It's now trying to break the channel, looking pretty good. And another ETF, MCHI, another Chinese ETF was one I showed, and it's been moving up nicely as well. So hopefully you guys caught those. And let's move on. Look at the bond market. Here's high yield corporate, still in this ascending or symmetrical triangle type pattern, hasn't broken out, but energy is building here. Notice the moving averages are starting to come together. You can see it on the ribbon up here. Chart 68, here's the S&P with the high yield corporate. Again, we've had this divergence for 2 months now. Obviously, it hasn't produced the pullback in the market. That's why divergence is not a sell signal, but it's still here unless if high yield corporate can break out to a new high here it'll be negated then. Driver 69, TLT 20-year bonds rallying off near the lower portion of this channel we've been showing. And Charter 70, here's the 10-year treasury yield. Remember that this wave kind of had ABC up. It's possible the wave C is up, or maybe we're just getting a little pullback here and we still go higher in that wave C. But I am looking for a lower high in the rates. Charter 71, moving to commodities. Here's DBC, been weakening. This is the little demand zone. Kind of had this little bear flag in the weekly look. Charter 72, there's the weekly view. Remember, it lost its 200-week moving average back in November, which was a problem. That 200-week moving average on a long time frame, on a weekly time frame, is your important area. And we've been below that, again, since November. Charter 73, there's the monthly view. You know, the moving average ribbon is finally starting to pinch. You know, it's been consolidating here for nearly 2 years. Charter 74, natural gas weekly, again up 5.6%, but off the highs. Notice after breaking this pattern, it came all the way to this long-term support. And that support goes back 28 years. Let's take a look at that. So here's the 28-year chart going back to 1995. This area, demand zone, you can see natural gas pulled all the way into it, logically bouncing off of it a little bit. It's been a long-term area, been tested many times over the years. Charter 76, here's the daily. Again, it was quite extended here. We had a big gap on Wednesday. It's pulling back now, but I do think I would start watching this for another entry because I still think it's a lower risk down in here. And Charter 77, here's UNG. That's one of the ETFs. This is a 60-minute chart. You can see it had a little base here, which it gapped out of mid last week on Wednesday. It's pulled back to here, so this could be a lower risk area to attempt the long again. That's something I'll be watching coming into Monday. Chartber 78, here's crude oil, pulling back right from that resistance. Again, your support is this little uptrend line here. Charter 79, copper, been in this little pattern, trying to break through that channel a little bit. Charter 80, here's DBA. Remember, it bounced off that 20-day moving average a week ago, made brief new highs. Now there is some divergence setting up on this new high to be aware of. Charter 81, here's the weekly. Remember this cup and handle we've been showing. So this is one I bought literally about a month ago on this cup and handle, been riding it. Haven't talked about uranium for a while. Here's URA. Well, it finally lost that uptrend line and 50-day moving average. I said last time that 50-day moving average was your critical support, and it lost that. I still like this long term, but it's now in a correction. Next, Charter 83. Here's Bitcoin. As you know, had a huge rally out of that low consolidation pattern. Right now, it's kind of flagging here, perhaps. Charter 84, Ethereum. This was one of the ETFs we put out as a long idea several weeks ago through this trend line, and it had a heck of a move. Some of the individual stocks, again, had heck of moves as well, like MSTR, but hope you took profits. It pulled all the way back to its 90 EMA, where it's been finding some support. The same could be said for Mara. Hell of a move out of here, pulling back to this little support area. Next, Charter 87, here's the US dollar. So, you know, it pulled back over the last couple weeks. Still hasn't, you know, it's still not really downtrending, but we'll keep an eye on this. It's important for precious metals. Charter 88, here's gold. So gold has been in this kind of coil-like pattern, rallied off of it. Again, one thing to watch, guys, is the ratio. This measures GDX to GLD. Remember, the stocks need to outperform. They've been underperforming. But if we can see this ratio break through the trend line here, and also the ratio break through the RSI trend line, to me, that would be good trigger confirmation. Something to watch this week. Charter 89 here, silver on the weekly time frame, down 2%. Again, you know, for the last 2 years, it's been in this big range. Charter 90, here's GDX. Again, this area has been absolute crap, bounced off that demand zone, basically bounced off that, you know, near the October low. It's still in a downtrend channel. It needs to clear this downtrend line, guys. Here's another trigger to watch. break on this RSI trend line would also be a good trigger. Chart 91, here's GDX on a daily again. Shows you the same thing with the channel. Okay, but also you can see the trend line on the RSI and on the ratio. These are two things I'd like to see confirmed. Chart 92, here's GDX on the 2-hour view. Just shows you the same pattern, essentially, that same channel. Notice price filled that gap where it found some support. But again, still the onus is on the gold bugs here. It's not uptrending. Chart 93, here's GDXJ. Here's a couple of these other ETFs. Chart 94, here's SILJ, Silver Miners Junior ETF. Again, it's in this demand zone. You can see the ratio. Chart 95, here's the BPGDM. Remember, this had pulled back to the oversold territory. Doesn't mean it can't go down to this low, the single digits, but it is in the oversold territory, so it is lower risk. Or you can wait for a buy signal here when you get into the parabolic SAR. Okay, this has been pretty good signals. Here's some individual names we're going to monitor. Here's AU, Anglo Gold. Actually has a really nice coil here. Look at the volume patterns. Your first target would be the supply zone, 200-day moving average. There's an open gap back here, another target. Next, third target would be this next supply zone. Notice the ratio is perking up here as well. Chart 97, here's AEM. This has had some relative strength lately. Notice the ratio is really turning up. So it's really outperforming relative to gold. That's good. Here's one you may not know about, Dundee Precious Metals. They bounced off the demand zone, but one thing I like is potentially the weekly chart. So here's the weekly chart. Notice, I mean, it's really held up extremely well for the last 3 years. Unlike a lot of the other gold stocks, which have just been downtrending forever, this has held up well. Potential large ABC correction over the last, 9 months. And the final one here, here's an oversold one. This is a silver stock, EXK. Again, it's clearly in a very strong downtrend, so be careful. But this is what a lot of the individual stocks look like. But maybe it's getting a little overdone. You have some divergence here. You got a really nice trend line on the ratio to monitor. So I don't know. One for you bottom pickers, if you get a trigger, maybe one to watch. All right, let's move on to the trade ideas. This is the last part of the newsletter. So here's Nvidia. Again, I already discussed this. Nvidia, remember we favored that pullback into earnings last week as a wave 4. That ended up being the correct call. We're now on a wave 5. We'll see how far this wave 5 goes. Next, chart 102, here's ESEA, was one of our short ideas. Played out beautifully, even with the uptrending market. Hope you took some profits at that demand zone. That was the area to take your profits. Chart 93 or 103, here's Adobe, was another short of ours. But you also had a long opportunity right off that 200-day moving average, at least for a trade. Chart 104, ABUS, was a long idea, beautiful coil pattern, beautiful volume patterns, was an excellent trade. If you're still long, I think you can put a stop right there, that little higher low around 285. Chart 105, TRU, remember ascending triangle from a couple weeks ago broke out. And I said, if you're still long, put a stop at that 73.31 higher low, and it's moving up nicely. Here's some other setups to monitor. PXD, this is a energy play. Hasn't broken out. This is your resistance. Pretty clean resistance up here at 235. Chart 107, CN, another energy stock. Again, it's low priced for a reason, but some interesting volume patterns. No trigger yet, though. Chart 108, CIB. Now this is a long idea that triggered last week. Had a nice clean resistance at 32.30. Nice move, good volume patterns. Hope you caught it. Chart 109, ASPI was another one of mine last week. Resistance was right here, and boy, did it have a big follow through on Thursday. Hope you guys caught that. I didn't catch it. I wish I did. Kicking myself. Chart 110, DG, Dollar General, broke out of that coil. Been struggling around the 200-day moving average, but if it can have another up leg, I'm targeting this area is the target zone. Chart 111, TSBX. breaking out of this little bottoming pattern, little biotech. Looks pretty good. Chartber 112, KMX. It's uptrending here, but if it loses this trend line, it could be a short. And here's some new setups, guys. VSCO, Victoria's Secret. Bull flag here. If it can break through here, you got a target zone right up in here. Supply zone. Chartber 114, PCT. Little flagging pattern setting up. If it can break out of here, first target, 200-day moving average. Next target is up here. Chartber 115, ES. Another energy play. Flagging here. If it can take this out, target would be the 200-day moving average and supply zone. Chartber 116, ENV. Kind of little nice pattern here to watch. See if it can take out this resistance area. And Chartber 117, EXFY, breaking through a little trend line here on expanding volume. One to watch, see if it can get some follow through. Low price stock. And the final one, EVH. Big move on Friday, big volume. This is one that potentially could follow through on momentum. Again, this is if you're only an advanced trader. So, because you don't have a consolidation here, just a big up candle. But, it may get another big pop follow through perhaps. All right, guys, that'll do it. Again, I hope you all had a nice weekend. Enjoy the rest of your Sunday afternoon and evening. And I will see you this week. Thank you for your support, Breakpoint Trade. If you haven't subscribed, please consider subscribing. I think you'll be impressed, and that'll do it. Take care.